Should one invest in gold? That's a common question I get asked, and my answer to that is emphatic yes. Gold should be part of one's portfolio. Rather, the precious metals, gold and silver, both should be part of one's investment portfolio. So let's discuss this more in detail. Gold and silver, they have been oldest form of money all throughout the history. And given our current monetary system, which is typically fiat currency based monetary system, it may collapse sometime or sooner or later. Like it's totally dependent on US dollar reserve currency based system. And if in some time in future US dollar collapses, this monetary system will need to be revamped. We don't know when that's going to happen, but definitely it's going to happen sometime. And in that situation, another monetary system will come into place, and gold and silver are going to be like the real form of money which help in such kind of emergencies. These are very remote scenarios, but we never know when it can happen. We have seen hyperinflation scenarios happening in Zimbabwe, and before the Second World War, it happened in Weimar Republic, which is Germany now. So it can happen. So to counter those emergency situations, gold and silver, the precious metals investments help in those scenarios. So hearing this, a lot of ladies may become very happy thinking that they buy gold, and that's why they buy gold jewelry, and that's why they are making the investment in gold. No, jewelry is not an investment in gold. Jewelry has a lot of overheads. There are impurities in that gold. There are making charges involved. So definitely it's not an investment. And jewelry is bought for emotional reasons. And any investment is not good if there are emotions involved in it, because that investment may need to be liquidated in some point in future. And we know like liquidating jewelry means like something total disaster. So jewelry is not an investment in gold. How to invest in gold? There are at least 4 or 5 different ways, which I will discuss now. One option is buying physical gold, physical pure gold. Buy gold biscuits, gold coins, or gold bars. They are sold by companies like MMTC, or even most of the banks. They sell this pure form of gold, certified gold. So one can hold this physical form of gold, which is good, but it has a lot of overheads in terms of security and maintenance. Typically, it needs to be kept in some safe place like locker, or in some safe place at home. So there are security concerns and overheads related to that. But having some form of physical gold, in the overall total investment portfolio, my recommendation will be to keep 10% in gold, and out of that 10%, 3 to 4% should be in the physical form of gold. Now, what about the remaining 6 to 7%? We'll discuss those options now. Gold can be bought in form of mutual funds, passive mutual funds, which track gold price. So gold price is an index. So gold mutual funds can be bought. There are gold ETFs, which are again like gold mutual funds, but they are actively traded on stock market, and we need demat account to keep those gold ETFs. They are also good. They may have some expense ratio associated with them, but that's very minor. But that's where the deviation from the gold price performance may happen, because of that expense charges which are related to the ETFs or passive mutual funds, but they are not much. And they are very liquid instruments. They can be bought in very small amounts also, and as and when required, they can be liquidated. Gold mutual funds can be sold back to the mutual fund companies, and gold ETFs, most of them have very good liquidity over the stock exchanges, so they can be liquidated as and when required. Now, the one form which I strongly recommend for investment in gold is sovereign gold bonds. These are the bonds issued by Reserve Bank of India on behalf of government of India with government of India's backing, and because of that backing, they are the safest form of investment. Because the sovereign backing is there, and so once the investment is made, one gets certificates with these bonds, and these bonds can also be stored in the demat form. So they can be held in certificates in physical form as well as in the demat form, and these bonds will track the price of gold. When the bonds are purchased, at that time the price of gold is determined, and the bonds are for 8 years duration, and every year they accrue 2.5% rate of interest on the invested amount. So that's the best part, because in all other forms of investment of gold, there is no return that you are getting on top of your investment apart from whatever the price variation happens in gold. There is no other additional interest. But over here, not only the price of gold is being tracked, you get an additional 2.5% rate of return, which is very good. It may not sound a lot, but it is something which on top of any other form of investment of gold. As I said earlier, like they are issued by RBI on behalf of government of India, so they have the safest backing of the sovereign. They can be also traded in liquid in stock market or in the bond market, but they are not that liquid. So only in extreme emergencies, this measure should be adopted, because there will be a lot of bid-ask difference, and seller may incur a loss on whatever price it may be sold. So that should not be advisable option, but in case of emergency, that option can be adopted. And another good point about sovereign gold bond is that if they are held for 8 years of duration for till the full maturity, no capital gains tax is incurred. In all other forms of investments of gold, be it physical gold or be it mutual funds or be it ETF or be it e-gold that I will discuss later, at the time of liquidation, if some gains have been made in terms of price increase of gold, whatever gains have been made, they will be taxed according to the capital gains taxation rules. But no such tax is applicable in case of sovereign gold bonds if held till maturity up to 8 years duration. So that's a big benefit. No capital gains tax, and every year you are accruing 2.5% rate of return. And if the gold price is going up, again, it's a very good return. So sovereign gold bonds are very good if you have an investment horizon of 8 years at least. They are very good form of investment. Other forms of investment like physical gold or gold mutual funds or ETFs, they can be liquidated much before as and when required. So allocate some portion in each of them based on your investment horizon, or if you feel that you can't hold it for 8 years, go for other options apart from sovereign gold bonds. But if you can hold for 8 years, go for sovereign gold bonds. Let's come to the last option, that is e-gold. E-gold is still picking up. The main drawback about e-gold is that it's still not regulated by any governing authority, so there is an element of risk over there. But the good part is that e-gold can be bought for as low amount as ₹1. There's no lower investment related to that. When you buy a unit of e-gold, you can buy it from PayTM, you can buy it from Google Pay, you can buy it from PhonePe. So if you buy a unit of e-gold, the corresponding amount of 24 karat pure gold issued by some company like MMTC, it is stored in a locker on your behalf. So the holding body, it will store it in locker on your behalf, and whenever you sell it, it will be taken out from that locker. But whatever the amount of units you are going to sell, the corresponding amount of gold will be taken out from the locker and sold and liquidated for you. So that way it's quite a liquid investment, but the big risk is that there is no governing authority controlling it, so there is a risk over there. And there's some companies impose upper time limit for how much time you can keep it invested for, how much time you can keep it in locker for. So based on that, you may need to sell it based on their time limits rather than being independent with your own investment time horizon. That's also something not very good about e-gold. So e-gold is still picking up as an option, but the best part is that you can invest very small amounts into e-gold. That's the best part I find about it. And just as you access PayTM or PhonePe and Google Pay, it's very convenient to invest in e-gold. Convenience is a big feature of e-gold. So all these are different options related to gold investment. Gold should be part of one's portfolio. Whatever investment channels suit you, make a choice based on your own situation. And if more guidance required, come to MegaMoney. I'll help you make that decision. I'll guide you. I'll coach you related to any money management matters. So that's all for this video. I'll keep creating more such videos to provide you more value, more content about related to money management. Follow me on social media. That's all for now. Thank you. Bye.